Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'll interject my financial opinions across the board. If you guys need any help or you're interested in anything about individual companies or whatnot, check out finding-value.com. Use the word discount in the coupon code. And we do have a Sunday, 7 a.m. Mountain Standard Time question and answer session. All right, let's dive in. Let's see what's going on with the markets. So we've got the dollar here. Dollar, we're slightly lower on the DXY, and we do have stronger yields. We've got, looks like to me, a little bit of a resistance area, kind of right where we're at. And it does look like we have been coming up on kind of a trend line here. So we'll see where this thing heads next. If we kind of jolt higher out of this little, I don't know, whatever you want to call it, resistance area, or if we're going to come and pull on back. When looking at yields, remember the dollar DXY is it's heavily influenced by yields and the monetary tightness of the dollar. So we look at yields, we've got strengthening today. Is this a reversal candlestick where we could potentially head lower? We had very strong yields in the morning and it went up there and it reversed and it could actually head lower throughout the day today. So that could head lower in the short term. Is this the topping pattern, something like that? It could be. We'll find out and we'll see where it goes from there. Again, this is the 2-year yield. The 10-year yield, that's got more of a clear break. So, I've heard people say, yields are going to top. I'm not exactly sure on that. We can obviously go down and do a retest move before heading higher. So again, I'm going to remain open. I think yields, the way that they're looking now, looks like they could continue higher. And in the short term, we could get a little bit of a pullback known as a return move or a back test of this trend line break. So I think the path of least resistance, maybe not in the short term, like the next few days, but over the next few weeks, I think is going to be potentially higher. TYX, which is the 30-year yield, still looks good to move on higher, not lower. It still looks strong to me. I don't see a lot of selling pressure anywhere in this circle, anywhere. It's mainly large green candlesticks with small red candlesticks. That generally indicates higher in yields. So that's what I see. And if you look at a big long-term big picture view, we are clearly broken out of the downtrend. We're moving up, and this still looks very strong here to move to the upside, not the downside. So when you look at what the yield curve is doing, it is still inverting. You can see that we gapped lower. Now, sometimes a gap indicates a bottom, but we'll see. Again, I'm not here to try to predict where things are going to go. I'm just going to say the yield curve is still inverting and we're at very low levels. That does not mean that we can't get lower. I mean, in history, you can see back in the 90s, we went far lower than where we are today. And in the 70s, it was a little bit lower in the 70s as well. The largest inverted curve was in 94. So we can still go lower, but we are at a very low level. Generally speaking, at low levels is when you want to accumulate precious metals, because that's usually when you get this curve to invert about as much as it can, and then it uninverts at some point. And that is positive for precious metals. But this is still inverting, which is not positive for precious metals. Looking at bond prices to me looks like they want to break to the downside. So what does that mean? Downside means further bond selling pressure and potentially higher yields. So there's that big selling off week this week. Big picture view, this still to me looks like we could go lower and that this was a consolidation period in a larger move to the downside. So looking at all of this, I would say that the yield curve can still invert further. I think we could still see bond prices go down and yields go up, which is still in the cards until I see further evidence otherwise. Gold today took this like a champ. I mean, we really had pretty strong yields across the board. We did have a weaker dollar, but again, we are stuck inside this support area, which is good. And hopefully that support area can hold. Depends how much yields and dollar go up. Silver down a little bit, and you can see that we've had stronger selling pressure with these muted kind of, flag patterns, which means we could still head lower in the short term. I don't see a strong indication that we are bottoming and ready to move on up in the short term. So I still think we could go lower there. Platinum, I think we're going to do some trampoline jumps all over the place where we're going to do some basing out. If we don't base out, then we could see further downside if yields continue on the rampage to the upside, which would mean very good buying opportunities in platinum at some point. And you got to keep in mind, they're going to have to keep rates high, guys, because of the real estate market. We're in the thick of this demographic. If they let off here, inflation's going to come back. It could come back either way. We've got a supply problem on a ton of different commodities. This is going to get real interesting here at some point. We've got XAU to gold ratio. Again, higher yields, the yield curve inversion. Gold doesn't like it, and neither do the gold and silver mining companies. So to me, it does look like we could even go a little bit further to the downside in this ratio, where gold and silver mining companies could underperform gold in the short term. CRB index barely lower, and we are still looking okay. It is trampoline jumping, boop, 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 sideways, basing out there. Could we change the way that this thing looks? I mean, maybe we could draw this thing out like this, and I yank this guy down, and we do something on the lines of that. Is this one gigantic consolidation area here? It kind of looks like it. There's a lot of individual companies that have charts that look like this, and it could potentially be that. Or you draw it in here, kind of draw it like this, and we've kind of broken out, retest, kind of going like that. It's tough to say. I'll just keep it here. I'll draw it up here, hug it up like this, and just say we're in a falling wedge type formation. CRB to S&P 500 down a little bit today. Again, the momentum's to the downside. I think this is going to end at some point, and we are going to turn. Would I jump in front of this? No, do not jump in front of this momentum. Let it base out, let it go sideways for a little bit, and you're going to get your wave 2 completion, and then wave 3 will start. It's going to be a big wave. There's going to be a lot of value created for commodities. GDX down. It does look like we could go down further. So we've got lots of selling pressure. We got to see the buyer step in here. That is the same for GDXJ and also SILJ. Lots of selling pressure here the past 2 days. Weekly candlestick, we could still go down a little bit further to the downside. Stronger yields, weaker precious metals, generally speaking. Crude oil's holding up quite well compared to basically every other sector. I still think crude oil has a good way to go up. Crude oil and interest rates are linked together. They generally go up together, and that is where I would probably be hiding out in an increasing interest rate environment. Generally speaking, increasing interest rates and inflation are tied together, and crude oil is the #1 inflation-sensitive commodity out there. Natural gas, down a little bit, but again, I still think this looks good. I think we're trying to put in some sort of bottom here. It's small selling pressure. It looks good. XOP getting a little bit more of the brunt. We're doing our full retest. So basically we came into some strong resistance here, couldn't quite make it, popped up again, came back to our support level. And I think it looks good. At least we put a little wick at the bottom there. It wasn't just strong selling pressure that ended strong. People came in, bought it up towards the end of the day, and pushed it back on up. I think XOP actually looks good, and you probably could get some bargains here. That's what I think. OIH also looking good. This is taking it like a champ. I think we're going to see further upside for energy service companies. Some sectors in energy service look excellent. Little bloody nose on the weeklies. Looks good. Sprott Physical Uranium Trust down a little bit. We're back within this pattern. We've got strong trend line coming up right underneath it. URNM getting a little bit more selling pressure. We're doing a full retest. Even if we go back inside the pattern, not a big deal. And it's not gigantic selling pressure. I know the overall markets probably are influencing the uranium sector, but a lot of companies have broken to the upside of their patterns and are doing retests. Those retests or back tests are generally where I buy again. I don't get afraid. I actually buy, and that is a strategy. URNJ getting a little bit more selling pressure with the juniors. It's getting flung around a lot more than URNM. TAN getting some selling pressure today. I mean, everything got selling pressure today, guys. It was basically across the board. But overall, it has a little bit of a wick at the bottom. We'll see where we go next. We've got COPX, again, selling pressure, higher interest rates. When interest rates go up with the ferocity, however you want to call it, ferocious. It was a ferocious move to the upside. A lot of these sectors sell off, but we're still within this channel moving sideways. Lithium, that is still broken out. I still think this looks good to move on higher. I would be a buyer of it myself. REMX is another one. It's doing a retest move. I would be a buyer of REMX right where it's at, as we've broken the trend line. And what I'm doing is, I know a lot of people take the peak of these and then they draw them right on the tip like this. What I do is I try to find a whole bunch of closing points and basically try to average the closing points. That's kind of what I do. SPX down a little bit, 0.8% or so. But it does have some buying pressure throughout the day. That's why you got a big tail on it or wick on the bottom of it. So I still think it looks okay. It doesn't look that bad. And NASDAQ, another big wick at the bottom there. Doesn't look too bad. It's not a full-on blowing large down candlestick that finished strong. It means there's buyers still willing to step in here and buy a little bit. So it's hanging on. Emerging markets, we're back down to the support level. I actually like it right where it's at. We've got strong support level in this general vicinity here. I think it's going to hold, and I'd be looking at some of the emerging market companies. XHB, we kind of blew out through here and never did a full any sort of retest or return move. I think that's what we're doing now. We do have a wick at the bottom. We'll see if we get some buying pressure next trading session and if the momentum can head on up. We are back to this support region in here. So we did kind of just touch off that. Move down 1.38% with the rest of the group. There's what it looks like, big picture view. I do think, maybe we can squeeze out a little bit more downside on this, but I still think it looks all right. There's not much selling pressure in that circle there. Still looks good. Copper down a little bit. We're up against that resistance area, resistance support, and we're just moving sideways. Iron ore moving sideways. I still think this is going to look good for a move on up, as I don't see too much selling pressure really in this circle there. It's mainly just consolidating, waiting for buyers to step in after a falling wedge pattern. Nickel still, I think this could meander lower. This could be a double top where we head down lower. Aluminum, looks like we're getting some selling pressure there still, and I still think we could still see some more selling pressure to the downside there. Baltic Dry Index going down a little bit. I actually think the Baltic Dry Index doesn't look bad where it's at. We're at a very cheap level here, guys. Really what this is doing is we need to be kind of tuned out to some extent because we've got a falling wedge. We've broken that to the upside. It's like, okay, let's just be patient, kind of tune ourselves down a little bit. A lot of these companies have some pretty good patterns that are dry bulk shippers. They're paying big dividends. I think these are okay down in this general vicinity to be looking. And even if we get a scare, I still think it's a great opportunity. Newcastle Coal, we're basing out. Let it base out. Just takes time. This may take some months. We may take 3, 4, 5 months even to base out here before hitting it to the upside. Watch the companies, the individual companies. If they start to gather and start to move to the upside, they may front run the coal futures. Ethereum down a little bit. There it is. I still think this is going to go higher. We are consolidating here. We're squeezing up into this corner here, and then I think eventually we'll work our way on higher when it breaks to the upside. The reason I don't think we're going to go necessarily to the downside is because if we were, why didn't we sell it all off here? Where are the big red candlesticks? I mean, there's some over here, but it's kind of mainly green candlesticks with small red candlesticks on the right-hand side. The sellers aren't whopping us. I mean, there's a few in here, but to me, it looks like we want to go higher by the way that this is kind of working its patterns. But and Bitcoin still looks like it's going to go higher as well. We've broken this to the upside. We've got a flag pattern that looks like it wants to continue higher. That also is further evidence that Ethereum could go higher as well. So basically, just a sell-off day today across the board. These days happen. Interest rates rocketing on up. Are we going to see a turn in interest rates? Well, let's wait and see. That's kind of my approach. And I still think that we are in wave 2. We need to end wave 2, start wave 3. And I think we're really close to that. If you were to ask me, well, if you look at uranium, we've got patterns that have broken to the upside. We've got XOP and OIH have gone to the upside. We've got lithium going to the upside. Rare earth metals broken to the upside. Could they be false breakouts to the upside? It's possible, but with interest rates and what they're doing, I still think that we are going to go in an increasing interest rate environment, perhaps, with increasing commodity prices, which could mean that inflation kicks back up. The base effects are already kind of caught up, which means our year-over-year calculations are going to be quite flat right now. And we'll see how that all plays out there. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys are interested in knowing the individual companies and how I'm playing this bull market. That is something that I go into detail with. And I do go over dividend-paying companies. I go over big leveraged ones, the lower risk, good return companies that I think in certain sectors exist. And this is kind of the overall big picture view. Obviously, you could have a couple of lithium companies, rare earths. Some of those sectors are really tough to play because a lot of them reside in China. So not really a lot of good companies. I've really shied away from some of these junior exploration companies, going after more of the cash flow type stuff. We'll call it real companies with cash flows. But that's what I've got for today, guys. We'll catch you next time. This is Finding Value.